OMFIF, the official Monetary and Financial Institutions Forum, is an independent think tank for central banking, economic policy, and public investment. A neutral platform for best practice in worldwide public and private sector engages. With teams in London, Singapore, and the US, OMFIF focuses on global policy and investment themes relating to central banks, sovereign funds, pension funds, regulators, and treasuries. Global public investors with investable assets of $39.5 trillion are at the heart of our network. Membership offers insight through analysis and meetings. OMFIF analysis draws on expertise from our in-house specialists and a global network of public and private sector members. Many OMFIF meetings, held under the OMFIF rules, take place within central banks and other official institutions. Over the last year, we have hosted high-level speakers, including the Chief Economist of the ECB, Federal Reserve Bank presidents, the Deputy Governor of the Bank of England, the President of the Deutsche Bundesbank, and the Chief Economist at GIC, Singapore's sovereign fund. To join us as a member or to find out more, email Chris Ostrowski, Chief Revenue Officer, on the address on the screen.
Hello, everyone, and welcome to today's session on the future of European sovereign debt. It's a hugely important topic, and we hope to do it justice over the next few hours. Some of you attending today may be new to OMFIF. For those of you who are, our mission here is to bring together the public and private sectors to promote dialogue that leads to better practice in financial markets. Our core strengths include our relationships with central banks and policymakers, as well as the global investment community. We have important institutes in the areas of sustainable policy and digital finance, and all of this coalesces today in this event, which also marks the launch of our new Sovereign Debt Institute, of which we're very proud and have some big plans ahead. So thanks to all of our speakers today for joining us, to our sponsors from DZ Bank and HSBC, and of course to all of you who join us in our virtual audience. We wish you could be here with us in person, and we look forward to doing these events physically when COVID restrictions allow. Today, we bring together an exclusive group of European sovereign debt management officers alongside investors and investment bankers to discuss the daunting set of challenges that they face. In response to the COVID-19 crisis, governments around the world are borrowing at unprecedented levels. The DMOs have been forced to adapt their issuance strategies under extreme pressure. The stock of global sovereign debt has risen dramatically, of course, since the onset of COVID-19, and it follows a decade or more of QE or similar programs since the global financial crisis. Yet, as supply booms, the demand for sovereign debt among the world's biggest investors is declining as yields remain stubbornly low. And we think that demand is probably getting lower still, as some survey results I'll share with you in a moment show. While DMOs respond to the challenges of today, of course, they also need to think ahead to how they can promote a return to normality and the future development of the markets. This must include their approach to issuing green or other forms of sustainable bonds, and how they adapt their approach to new issuance techniques and technologies, including, of course, the increasing digitalization of financial markets, such as how central bank digital currencies might impact ownership and trading of sovereign debt. These are the topics that form the basis of our discussions today, and there's a heck of a lot to discuss. Any day now, we're going to witness a landmark moment for the European and indeed global debt markets with the debut issue from the Next Gen EU Fund. So we're really pleased today to hear from two people central to that effort at the start of today's session. First up, we'll hear from Johannes Hahn, Commissioner for Budget and Administration at the European Commission. That will be followed by a Q&A with Siegfried Ruhl, Counsellor to the Director General for the EU Budget, European Commission, and also importantly, of course, the official in charge of Next Gen EU's borrowing plans. We'll then have two panel discussions with leading European sovereign issuers from Germany, Italy, Portugal, and the UK, the latter of which we hear is readying its debut green gilt for September, alongside influential buyers and lead managers of their issuance. So let me just share with you now quickly a little bit more information on how you can enjoy and make the most of today's event. We're holding it on the Swapcard platform, of which many of you may be familiar. Please use the discussion box on the screen to ask your questions and chat with the audience. If you'd like to continue this discussion, you can connect with our speakers by clicking the Add Connection button next to the speaker's name below, or via the speaker tab above. You can also send connection requests and start conversations with your fellow attendees. If you'd like to find out more about our sponsors, you can visit the exhibitor tab. Here, you'll also be able to find out more information about the Sovereign Debt Institute. Head over to the agenda to register for further panels and keynotes. And if you missed a session, all the content will be available via the on-demand tab. But before we start the discussion, I wanted to share with you some of the findings from OMFIF's Global Public Investor Survey. This is a big research project that we carry out every year, and it makes for some interesting debating points during today's event. The survey covers detailed questions on how these institutions, which are central bank reserve managers, public pension funds, and sovereign wealth funds, plan to allocate their assets and what they plan to do over the next 12 to 24 months. We've also this year asked them some specific questions about their likely allocations in the debt markets. So let's take a look at the data. Our first slide shows the respondents. We had over 100 respondents to this survey. As you can see here, the majority of them are from central banks, but we also had a number of pension funds and sovereign funds as well. So that gives you an idea of the kind of important universe that we survey in the GPI survey. Moving on to the first set of results, and this shows a significant net appetite for riskier asset classes. And these are typically more risk-averse investors who are now going up the risk curve. It's not an asset allocation you would likely have seen from central bank reserve managers in particular in the past. We can see corporate bond allocations rising, equities, real estate, and private equity. All of these are going up substantially. And one must ask, if this type of investor is doing what we see here, what does it mean for the rest of the investor universe as well? Cash, you can see a big decline. Cash is certainly no longer king. And there's a net decline in allocation to government bonds. But we'll look at that more closely in a second because there's a deeper story to be told here. So moving on to the next slide, and this one shows investors' attitudes towards different types of fixed income products. It also shows very clearly the search for yield. None of the 100+ respondents who took part in the survey are reducing their allocation to emerging market sovereign debt, for example. Supranationals are up, and maybe there are some concerns there about sovereign credit ratings. But developed market sovereigns suffer a substantial net decline, or they will do over the period under review. And there's also a net fall in allocations to euro issuance from sovereigns. So that tells us an interesting story ahead of today's discussions. Moving on to the next slide, we have a couple of charts now that are very relevant to today's discussion. We can see that central banks are hungry for the common European issuance. So we asked the GPIs whether they expected the new EU debt instruments to become a core part of their reserves portfolio. And most central banks do, but certainly not all. Fewer than half of the public pension funds that we survey will, though. So that makes for interesting reading. And there's an interesting story here as well on the next slide about the regional story and the regional view of the NGEU debt. There are some big discrepancies here by region. As you'd expect, in Europe, the next-gen EU bonds will likely be very popular. And there's also strong demand in the emerging markets across Latin America, Africa, and the Middle East. The US is broadly neutral, but some of the big funds and central banks in Asia seem less sure that these bonds will become a core part of their portfolios. And I'm sure Siegfried will be interested in these findings and be discussing them in his Q&A later. Our final slide refers very directly to the second panel that we have today, and it looks at sustainable bond allocations from central bank reserve managers. And we can see here that already most central bank reserve managers are buyers of green bonds, although less so in the public pension funds. We asked central banks specifically if they plan to increase their holdings, and we can see that 65% of them are going to increase their holdings in green bonds, albeit that there are a few you can see who say they will significantly reduce their holdings. There's also, I think it's interesting to note among these central bank reserve managers, growing interest in other forms of sustainable products, including in equities and ETFs. So if you want to study these results more closely, then please do go to the OMFIF SDI exhibition stand where you can see them. But now let's turn to our speakers, and I'm delighted to welcome first up Johannes Hahn from the European Commission, who will be interviewed by OMFIF's chairman, David Marsh.